week 4, the end of the month. The last day of the month actually goes into the week after this one, but everything that takes time to settle, such as stocks or any kind of trades that take time for settlement. Anything that's traded through Thursday of this week will settle in the month of February, and then anything that's traded on Thursday and Friday of this week will be settling in March. So let's see if we have two different sort of flavors to the week. Some kind of activity that's going on Tuesday and Wednesday, and then a change in behavior Thursday, Friday. We're also heading into the final month of the quarter, and we're going to have the ES contract roll over. Not this week, but in the second week of March. So we're getting really close to that contract rollover time, and we always see some kind of huge swing in the market happen as we go into that contract expiration. So we'll talk a little bit more about what that might mean for the S&P 500 as we get into this video. We're starting off looking at an intraday chart of ES. Here was Friday's action over here on the left side of the screen. Here was the overnight high on Friday, and then here is all the session could do on Friday, a lower high against the overnight high, and then here we set a new low for the month of February and tried to bounce back into the end of the day. And then everything that's inside this black box here is what has been going on trading over the holiday now with the U.S. markets closed. So here was the Sunday night open and trading overnight up until 1 o'clock Eastern today. Futures still traded even though the U.S. markets were closed. And you can see that at our overnight high point around 2:20 a.m., we took a look above the session high from Friday, only to come down, slam down, and break down below the session low from Friday and set a brand new February low on futures. And this low on futures that was set right into the close at 1 o'clock Eastern this afternoon, that got down to 42.85.25. So that would, if we add on 6 points for the S&P 500 spread, that would take us down to about 42.91 on the S&P. And that's kind of interesting because if that were to play out tomorrow, for instance, that would take us right down to the bottom of our fork, because that is where the bottom of our bull fork is coming in as of tomorrow, is 42.91. So I think that's kind of interesting that if that all plays out, if that low that we saw in futures is going to be the low for the moment, maybe for the month of February, maybe we're going to open up Monday morning, we're going to touch down to that low, resolve it, turn around, and move back up again. And in moving back up again, I think ultimately we're looking to move back towards the 45.20 level. This is the big halfway back. This is the halfway back for the year so far and the quarter. You can also look at this chart and see that a head and shoulders formation is starting to play out, with the left shoulder being over here where we set the September high and sold off from there. The head of the head and shoulders being the all-time high, the January in 2022 high up at 48.18. And then in order to fully fill out a right shoulder, I think we need one more trip back up here and see what happens. If we're going to sustain support, if we're going to regain 45.20, sustain support, maybe this head and shoulders pattern will wind up getting foiled with a move all the way back up towards the all-time high. Seems like hard to believe that that would happen, I know, but that's what it would take to foil this pattern, and we see this pattern either play out or get foiled every time it appears. Now, if we were to just get back up here to about 45.20 and sort of chop around for a few days, a few weeks, whatever, and then we break down again. If we break down and break down underneath the bottom of our fork, then we're probably going to be looking at a play out of the head and shoulders pattern. And what you do with that is you draw a line from the top of the, this isn't like a steadfast rule, but it often plays out this way. You draw a trend line from the top of the left shoulder through the bottom of the neckline, and for us right now, that's the January low, and you let that trend line just play out. And right now, you can see that if we broke the fork, that's where we would be going. We'd be looking towards, if we cannot hold above the January low either. So if we break the fork, we break the January low, we would be targeting all the way down here to this trend line. And just for the sake of making the chart more readable, I'm not showing, where that would be over the course of the next few weeks. But the longer that we would sit here and mess around, creating some chop and filling out that right hand shoulder, the longer that takes, the more severe the drop would be if the head and shoulders pattern is going to play out. So that's food for thought. But in the meantime, what we want to look for is a bounce and a hold above at this 42.91 level, holding the fork in place and playing long this bounce back up here to 45.20. We can make a lot of money off of this and then just sort of wait it out and see what's going to happen here. Are we going to take out 45.20 and keep on going, break up through the median line of this fork and extend this all the way, into the middle of this year, a move back towards the all-time high and foiling this pattern? Or are we going to just trade up to here, chop around for a while, buy some puts, and enjoy the ride back down again? So those are some things that we can look forward to over the course of the coming weeks. And let's just take a quick look at how Friday played out. Here is the intraday chart of the S&P 500. Here's where we opened the day. Our settlement price for February came in very close to where the open was, only about a point off of it, not even. I think that is actually maybe a little bit of a bullish sign, because when we have a settlement price that's way off from what the actual open is, there's usually some underlying thing going on in the market that isn't quite healthy, isn't quite right. Well, this was really close together, so I think that this is going to help fuel a bounce for us, but we've just got to get out of the way whatever was going on in futures while we were away for the long weekend. And that's going to unfortunately take us for a ride down to about 42.91 to match that price that was set while we were off. But anyway, here's what happened on Friday. We got our open, we got our settlement price, we traded off down to a new February low. I've got to fix this level here on my chart. And then we traded all the way back up towards the open as the afternoon went on, only to get sellers hitting us into the close. So some risk came off ahead of the long weekend and the stuff going on with Putin and the Ukraine and all of that. And that's what was fueling that drop in futures this morning as well, I'm sure. So let's take a look at our roadmap and let's discuss a couple of things going on there as well. Let me pull that chart up. This is what's going on here. We've got a huge bear cross coming down our way once again, with the 10-day getting ready to come back down through the 20 and the 200-day simple moving averages again, after having a little tangle with it here and crossing back up through the 20-day, creating this bullish buy signal, only to have it coming back down again, getting ready to make a sell signal. A lot of times when this happens at the end of a long sell-off, which we have been in, really since all the way back here off of the chart, we can't even see it, with this cropping that I have of the chart for you right now. This to me is going to get treated as an oversold event, but we've got to get that level resolved. If that's what traders want to do when we open on Tuesday, maybe we flush on down, take care of that 42.91 level. That would be, commingling in here with these lows that were set to back test the January low at 42.22. Then we bounced and we came down to 42.87 and 42.92. Maybe with that 42.91 level, that would resolve and take care of that ES low that was set. That kind of works right in here in between these two levels. Maybe that's going to be a good spot where we can buy some calls and take that ride back towards 45.20, as I showed you, to help fill out that shoulder and see where we go from there. There's a big gap here to last Wednesday's close that we would fill as well on the way. So initially we would go after these simple moving averages, then fill the gap, then go after 45.20, and then we reassess and see what kind of gas we have in the tank. Are we going to go after these little highs here and try to take a run at the simple moving averages? Are we just going to sit here and sort of shop for a few days and then fall and fulfill that head and shoulders pattern? Or are we going to blast on through here, regain our 50 and our 100-day and fill this gap all the way up here and keep going and maybe foil the head and shoulders pattern altogether? So different viewpoints of the chart and some different scenarios, but I do think that there is a very good long trade coming our way towards 45.20. We can at least make some money on that, and we'll see if we're going to be able to load up on some puts for the ride down to fulfill that head and shoulders pattern. Okay, hopefully I didn't repeat myself too many times here, because this is about the third time I've shot this video today. Hope you guys had a nice long holiday weekend. We'll see you tomorrow, Tuesday the 22nd. As always, good luck and good trading.